Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Market's still holding on about the 19,300 level today, so that is something that is not a bad news as of now at least, and seems like a good afternoon coming in.
Absolutely, a very good afternoon to you, Vinny. And if you look at the markets, actually, it's a range-bound trading session that we are witnessing in for the benchmark indices. If you look at Nifty, like Vinny mentioned, yes, we are holding above the 19,300. In fact, we are holding above the 19,350 mark as of now. If you look at the markets on your screen, we are at the day's highest point when it comes to the benchmark indices. Take a look at Nifty Bank, tad bit of underperformance coming in for Nifty Bank when you compare it with the benchmarks, while the broader markets actually continue to outperform, with small cap index actually seeing gains of about 0.6% as we speak. For now, if you look at the advance decline ratio, very much tilted in the favor of the advances as of now. Talking about the sectoral indices, then you have the PSU Bank Index as the top sectoral loser, 4.7% downtick coming in for PSU Bank Index as we speak. Along with that, you have FMCG Index also that's seeing some sort of weakness. But on the flip side, if you look at the gainers, then it's the Realty Index that is actually gaining the most, 1.7% uptick coming in for Realty Index, followed by Metal, Media, Auto, IT, all of them seeing good gains in today's trading session. So that's the way how the markets are looking like at this point in time. Range-bound trading session coming in for benchmark indices, with Nifty holding above the 19,350 mark as of now, Vinny.
Absolutely, but on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. Today on the technicals, we are joined by Kunal, Bothra, while from the research team, we have Ankita as well as Vamakshi joining with us. A very good afternoon to all three of y'all as well. Let me start, as always, with the first stock, and that is going to be UPL today. UPL is in focus after we've seen a brokerage note that has come in from HSBC, where they're maintaining a buy on the stock and given a target price of around 775 rupees per share. What HSBC is highlighting that the company is in a transitory difficult phase before the resurgence will actually shape up, as well as this year possible recovery we could see in UPL in Q3, given the visible signs of reducing inventories and stabilizing prices as well. The stress test suggests that the balance sheet remains protected despite the headwinds that the company may see, and the LATAM side of the segment and the countries that they cover, that is a potential catalyst for the company. Global CP business is something that could be has become undervalued according to them, and that is why they're keeping an eye out on UPL as of now, and that is the take coming in from HSBC. As of now, you can see the stock is trading with gains of 2.3%.
Alright, moving on, let's talk about a stock that actually hit a 7-month high in today's trading session, and that is Rashtriya Chemical Fertilizers, or RCF. As we all know it, if you look at the stock price, at one point in time it was trading higher by about 5.5%, taking it to a 7-month high. And why such an uptick coming in RCF is because the government has granted it a Navratna status. So on back of that, you have RCF that is actually buzzing in trade. RCF is now the 15th company to have earned that particular status. And what does Navratna status for these PSU companies means is the fact that they are PSU companies with enhanced financial autonomy, and they are allowed to invest about 1,000 crore rupees without seeking government approval. So Navratna status coming in for RCF, and post which, as you can see, the stock is trading higher by approximately 4% as we speak on an intraday basis, touching a high of 7 months.
Okay, let's talk about one more chemical name, and that is Deepak Nitrite. Kunal, on the charts, how is Deepak Nitrite looking like? This one too is buzzing in trade. Last 1 week also has seen a very good and decent gain coming in. Last 6 months, yes, a bit more flip-floppy, corrected from those high levels. So now what are the charts indicating?
Charts are indicative of a possible breakout which is coming back into this name. Deepak Nitrite has been a stock which had gone through a correction from 2021 highs of 3,000 levels to a point where I think there was a 40% correction towards 1600, 1800 mark for Deepak Nitrite. So it's trying to make a comeback, from that major correction. And this time around, the only change which has happened for the stock is the formation of an inverted head and shoulder pattern on the weekly as well as on the monthly charts, and that should augur extremely well. So this goes in sync with many of these chemical stocks making a comeback and trying to break past about their previous resistances. So I believe that this could be a strong move for Deepak Nitrite. Would be bullish on the stock with a potential target of 2,300 to 2,400 over the very near term.
Alright, so that's a take coming in on Deepak Nitrite, and not to forget, all the specialty chemical stocks are a buzz in today's trading session. But let's move to textiles then. And Gokul Das exports Vamakshi. This one is soaring away in trade today. In fact, it's locked in upper circuit of 20%. What's the reason behind it?
Well, Cheryl, yes, the stock is locked in upper circuit, and that is because the company announced that they have expanded their global presence. They have acquired the Atroco Group for nearly 55 million US dollars. Now keep in mind that the acquired company is a manufacturer of apparel with a strong market position and customer relationships across the US as well as the European region. The company does have it does operate with a network of almost 4 manufacturing units in Kenya and 1 in Ethiopia, and in fact they're producing almost around 40 million garments. Now this capacity, especially when you compare it to Gokaldas's own capacity, is almost equivalent to it. In fact, the company also has PAT margins of nearly 7%, which is equivalent to that of Gokaldas. Now brokerages are saying that the deal is valued quite attractively. The deal is valued at nearly 0.5 times of the EV to sales, and in fact this acquisition looks quite attractive considering the kind of scale that the company has, and in fact it is long-term positive for the company considering that the scale of the acquired businesses, it gives them access to low-cost duty-free manufacturing locations as well as long-standing relationships that they have with their existing clients. So all in all, we do have Gokaldas Exports in focus on the back of that acquisition. The stock is locked in upper circuit.
Absolutely, the stock is locked in upper circuit, but we also managed to speak to the managing director, Mr. Ganapathy, on this as well. And what are the talks about acquisition plans? What more does it mean for the company? Let's go across and listen in.
And the purpose for this was really to expand our business, expand our manufacturing footprint, and take advantage of the future growth in the market. With this asset, we feel that we'll get access to a very well-run organization. It has been in this business for over 3 decades, or about 3.5 decades. It's got excellent client base, which is very complementary to the customer base that we have. And it has got presence in duty-free, low-cost regions. So from that standpoint, we went ahead and said that, strategically it makes sense. We can cross-fertilize our customers between our company and that company. We can also, plan our growth more judiciously in low-cost regions. So it gives all of those benefits going forward. We've priced the acquisition right. We believe we've been fair in pricing it. And we believe that the possibility of revenue growth as well as margin growth in that asset exists. Over the next 2 to 3 years, once we get control over the asset, we will start working on upgrading the plant machinery and expanding the business as well. So we feel that definitely it will help us in our not only top line growth but also margin growth.
All right, so that's the management of Gokaldas Exports outlining the rationale behind the acquisition and what it means for the company. But moving on, Ankita, let's talk about Reliance Industries. You had that all-important AGM take place yesterday. Post that, you have a lot of brokerages come up with their notes. But what do you have for Reliance Industries for us?
Correct, Cheryl. We had the Reliance AGM yesterday. Just quick key takeaways. Reliance, the key things that were announced yesterday were the fact that, on telecom, they expect a bulk of 2G users to join Jio network with the launch of Jio Bharat. Jio Air Fiber will be launched on the 19th of September, and Jio Fiber is likely to increase the addressable market to 200 million homes, and they are also developing an India-specific AI model. On the retail front also, they aim to take few FMCG brands globally in Asia and Africa, and the retail revenue and EBITDA growth will be the fastest. Now on the Jio Financial side, they said that they will enter the insurance segment with life, general and health insurance products with global partners very soon. Now on the back of that, we saw some brokerage notes coming out today, and we had Goldman Sachs come out with a buy rating on RIL with a target price of 2,725 rupees per share. Now according to them in the new energy segment, they feel that they have stepped up the hyper integration initiatives to deliver cost leadership, and also that will be driving India's RE transition. Also on the telecom segment, they have mentioned that the focus of the company has been on gaining more market share, and on the retail side, the hyper growth from expanding reach and new products is likely for the company. And on the back of that, Reliance share is going to be in focus today, but as of now, it is trading near day's low.
Okay, that is Reliance. But let's move on and talk about another chemical name. And Kunal, you've picked out one more, that is Tata Chemicals. What are the charts indicating for this one? Similar to the ones you spoke about before, or something different that we could expect from Tata Chemicals?
Yeah, a tad bit different for Tata Chemicals. Coming out of a 9 month of consolidation, and Tata Chemicals is a very high beta stock. So when you look at the historical beta for the stock, it exceeds levels of 1.5 times the benchmark indices of the Nifty 50. As such, many times we've seen the beta going for the stock at 1.82. Now, for a stock which has such a kind of a high beta, if you look at the last 8 or 9 months, the stock or the beta of the stock had dropped down to 0.7, 0.75 approximately, which means that the stock had gone into a major time-wise correction in this last 9-10 months. What you're seeing today and over the last 1 or 2 days specifically is a breakout of sorts coming back for Tata Chemicals. The stock trying to come back into a breakout mode of this 9 month of consolidation, and once that happens, and if the stock regains its beta nature, I believe that the move on the upside could be pretty quick for Tata Chemicals. So bullish on the stock, expecting the breakout to sustain for the stock price, and hopefully the stock climbing up at least another 10% in a very short span.
Bullish on the stock, that's the view coming in on Tata Chemicals from Kunal. But let's move on, talk about Capstar and Pharma. Why is this one in focus? Now, they've actually received an order. On the back of an order when we're seeing that the stock is buzzing in trade. This is around a 575 crore order that they have received, and this is from RVNL for an EPC project in Maldives that is expected to be completed in a period of 18 months from the commencement date. And post this announcement that has come in, we've seen that the stock actually saw a sharp spike coming in and a jump up, and 575 crores is what they received this order for. So let's keep an eye out on Capstar Infra today in focus, trading with gains of almost 3% as of now, just slightly below the day's highest point, but yes, still good gains that have come in for the stock.
All right, moving on then, let's talk about Gujarat Fluoro, because that particular counter is abuzz in today's trading session. It has hit its highest level since June 27. Not just that, on an intraday basis, it saw its highest percentage gain since August 11th. The reason why Gujarat Fluoro is buzzing in trades is the fact that Investec has come up with a note where they've initiated a coverage, and they initiated a coverage with a buy rating for this particular counter with a target of around 3,450 rupees per share, which is actually approximately 19% higher than yesterday's closing price. What Investec is noting in their note is the fact that they're saying the demand for fluoropolymers, which is a key component or key product of the company, is expected to see a growth of approximately 7 to 8% from the years of 2022, 27, and that's going to be because of demand by the new age industry. So on back of that, you will have demand higher for this particular key product that the company makes. Apart from that, what they're saying is that new fluoropolymers and battery chemicals business will drive the growth for the company with rising penetration of EV in India. Therefore, Investec is giving a thumbs up to Gujarat Fluoro. In fact, initiating a coverage with a buy rating, setting a target price of around 3,450 rupees per share. Stock is trading higher by 4%.
Let's move on to stock number 9 for today, and that is going to be Voltas, Kunal. And when you look at it in the last 1 month specifically, seems like the stock has picked up some bit of pace again. What are the charts now indicating for this one? Would it still be a buy at current levels?
Out of a 200-day moving average breakout, after being trading below this average, I think for the last 1.5 year or maybe 14-15 months approximately, which means in May 2022, April end and May 2022 is where the stock had broken below its 200-day moving average. That was the point when Voltas was almost at 1,200 rupees. From there, the stock had fallen down to as much as 700, 730 mark, and now it's trying to go into a recovery phase. So what's actually happened is that in this leg of recovery for the stock in the last few weeks, it's broken past about 200 DMA, it's broken past about the swing resistances, and is now trying to get into many bullish crossover modes. So all in all, looks attractive, and if this could be a recovery of sorts for Voltas, then it could stand up to cover up the huge underperformance the stock has shown from the previous year. So even 1,000 plus levels could be something which I think could be a potential target on the upside for Voltas, provided the stock confirms the breakout and sustains above those levels.
All right, moving on, Gensol Engineering, Vamakshi, why is this one in the news today?
Stock is soaring in the trading session today, and that is because the company has announced that it has won its maiden 2 turnkey international solar EPC projects that are in Dubai, and these projects are from Dubai Government Workshop Warehouse as well as Dubai Police. Now, both of these projects have a cumulative order value of nearly 101 odd crores, and this is without taking taxes into account. With this, they ventured into the international markets, and in fact, the management says that in addition to this, there are multiple orders that will be announced in the coming months. So a big positive for Gensol Engineering on the back of that news flow, as well as the commentary that came in from the management, and that is the reason why the stock is a buzz in the trading session today. As of now, it is in fact locked in its upper circuit of almost 5%.
Absolutely. Keeping an eye on that one. Gensel Engineering locked in upper circuit. But let's move on, talk about Indian Bank. And Ankita, we do have a brokerage note that has come in on Indian Bank. What is it saying? What is it indicating?
Finny, there's a brokerage note on IndusInd Bank by Investec, and they have downgraded it to hold from buy, and they've also hiked the target price to 430 rupees per share from 400 rupees per share. Now, according to them, the NIMs are approaching the all-time highs, and which is likely to decline incrementally. Now, excess liquidity buffers are also considerably drawn down. They also feel that the credit cost decline is going to be a huge advantage for the bank in the near term, and they feel that the valuations for the bank are at par with the SBI, and they believe that the valuations fully reflect the best case scenarios, and on the back of that they have downgraded the stock to hold from buy, and they've also hiked the target price, and on the back of that the stock is down almost 1.5% in trade. It's currently trading at its day's low.
Investec, which has downgraded Indian Bank, and that's the reason why Indian Bank stock is actually under pressure in today's trading session. But Kunal, coming to you, Lakshmi Organics, how is this one looking on the charts to you?
Generally, I don't talk of these kind of stocks, but then Cheryl, what stands out for the chart is a major recovery which could be in play for Lakshmi Organics. Now the stock was almost at 600-650 levels in 2021 second half, had fallen down to 200-220 mark, which means a sharp reduction of more than 50% for the stock price. Now what you're seeing is a recovery of sorts. For the first time, the stock has broken this chain of lower highs and lower lows, and that too on the back of some extremely strong and encouraging volumes over the last couple of days. So all in all, looks fairly attractive, and this could probably be a turnaround candidate from the mid-cap arena.
Let's move on and pull up the steel stocks and why are they in focus today. Now, actually, what has happened is that India's primary long steel mills have once again hiked the rebar prices by rupees 1,500 per ton. This is the fourth hike that we're seeing since early August, and overall the cumulative hike that has been to the tune of around 3,500 to 3,700 rupees per ton as well. This is the sharpest hike that we've seen in the past 1 year during a month's time, as well as so keep an eye out on JSPL, JSW Steel, ECL. All these have taken smaller hikes, and now the rebar prices ex Mumbai stands at 54,000 per ton. So on the back of that, we're going to be keeping an eye out on all the steel stocks today. And as of now, you can see JSW Steel, Jindal Steel, Tata Steel all are up almost more than 1% in trade.
All right, moving on, let's talk about Bharti Airtel, and that particular nifty major is under pressure in today's trading session. At one point in time, Bharti Airtel was among the top losers on the nifty, and the reason for downfall coming in for Bharti Airtel is the fact that there were multiple block deals that actually took place in today's trading session. At one point in time, actually the block deals were higher than about 90 lakhs as well, and most of the block deals took place in the price range of around 850.45 to 867.90 rupees per share. So on back of the multiple block deals, we are seeing this particular stock under pressure. Now it's recovered from the day's lowest point, nevertheless trading with losses approximately 1.2%. We're yet to know the exact details of the sellers and the buyers in this particular block deal, but that's Bharti Airtel for you under pressure.
Let's move on and talk about Bharat Forge then. And Kunal, on the charts, what is Bharat Forge indicating? We've seen a decent return coming in terms of the last 6 months, 30% uptick already. What is the upside that one should expect from Bharat Forge?
So this is a major multi-year breakout for Bharat Forge. The previous high for the stock was around 925 mark, which was in December 2022, and the stock has decisively broken past about those levels. Now we have a standard estimate that whenever the stock gets into a breakout mode of the lifetime highs, it rallies up by at least 10 to 15% in a very short span of time. And the rally is very strong, or if the breakout is very strong, we expect the stock to climb up to at least 20 to 25% in a short span of time. So by the conservative estimates, we are looking out for 1100 to 1150 as a potential target range for Bharat Forge. So the view remains bullish.
All right, that's the view coming in for Bharat Forge. By Vamakshi, SJVN, why is this one a buzz?
Well, Cheryl, the stock is a buzz on the back of a news flow that came in. The company announced that SJVN Green Energy, now this is a wholly owned subsidiary of SJVN, they have received an LOA from Assam Power Development. Now, this LOA is for nearly 3 solar power projects of cumulative capacity of 320 megawatts. These 3 solar power projects are expected to be developed on build, own and operated basis, and in fact the projects are expected to be commissioned in a period of over 18 months from the date of signing of PPA. These projects are expected to get commissioned by March of 2025, and a PPA is eventually expected to be signed between Assam Power Development as well as SGEL for a period of nearly 25 years. The tentative cost of construction or development of these 320 megawatt projects is around 1,900 odd crores. So an LOA has been signed with a subsidiary of SJVN, and that is the reason why this counter is soaring in trade today. As of now, the stock is up nearly 2%.
Let's move on and talk about Federal Bank on the charts then. And Kunal, what is the indication that you're picking up from Federal Bank? Last 6 months, 12% return, 8 to 12%. So now what is the upside that one should expect?
Again, a stock which has been an underperformer for Federal Bank. When we talk of the private sector banking names, we generally tend to ignore Federal Bank in terms of the way the stock has broken out because of the slow, steady and the gradual uptrend the stock picks up after weeks of consolidation. Such a similar consolidation had happened for Federal Bank. The previous quarterly results, the stock was trading into a range of 130 to 135. The stock has broken past about those levels, and it now looks like for the first time Federal Bank could cross the levels of 150 in this leg of uptrend. So even from a short-term trading play, would recommend a buy on Federal Bank with a potential near-term target of 150 plus.
That's a view coming in from Kunal on Federal Bank. But earlier in the week, we spoke to Mahesh Nandurkar of Jefferies, who's given his view on the small as well as big bank, saying that the bank is the best way to play the capex story in India. Listen in.
The valuation standpoint, it is the only sector where the current valuations are in line with historical averages. For most of the other sectors, the current valuations are much higher. So even from the valuation standpoint as well, the private banks and the large banks are looking, quite reasonable. I think one of the key issues that we are facing at this point in time, and why the banking sector hasn't really done well, is the over ownership. A lot of people who could have bought have already bought. We're already seeing overweight in the domestic, mutual fund insurance sector. We are seeing foreign investors are also overweight on banks. So we definitely need, some incremental flows at the broader level for the sector to perform. But having said that, if you look at the stark difference between the large cap banks, the last 12 months or so, the large cap bank index is up like only 6%. Many of the other segments of the financial, stocks like BFSI stocks, be it the small finance bank, be it the NBFCs, or be it the small private sector banks, they've all gone up by 60-70%. So there is a huge, gap that has got created, and I believe that banks is ultimately going to be one of the ways in which you can possibly play the capex story in an indirect way.
Let's move on and talk about Sun Pharma then. And Ankita, why have we picked out Sun Pharma for us today? Why is it in focus?
Well, Vinny, Sun Pharma is in focus on the back of AGM that they held, and if you look at the key highlights from the AGM and the management commentary on for the AGM, they feel that they expect to achieve high single-digit consolidation top-line growth for FY24. Also, the expansion of company's global specialty business, is expected to continue, and the company's R&D and spending is expected to be around 7 to 8% of sales in FY24. Also, they continue to focus on improving manufacturing efficiencies and optimizing their costs, and on the back of that, Sun Pharma is going to be in focus today.
All right, that's Sun Pharma for you, but let's put the spotlight on Som Distilleries, because this particular stock was a buzz in today's trading session, saw an uptick of as much as 5%. It's the best intraday gain coming in for Som Distilleries since July. And the reason for this particular up move coming in for Som Distilleries is the fact that the company has informed exchanges that the Chhattisgarh state has allowed beer supply, and it has actually started the initial dispatches for the same. So on back of that particular approval coming in from the state of Chhattisgarh, you can see Som Distilleries sharp spike in the stock, taking it higher by about 5%. Now it's given up some of those gains, nevertheless holding on with gains of about 2.6%.
Okay, that is some distilleries for y'all. But on that note, viewers, we're going to sip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.